My name is Bauman. I am co-founding a startup called Galoy, and I'm excited to talk to you guys today about decentralized finance. So a little bit about my background. I went to UT, Hook 'em Horns, and then corporate finance in Houston, came back to Austin and worked for a fintech company called Scale Factor, moved to Denver and worked for a company in the blockchain space called Market Protocol, a decentralized finance protocol startup, and now am building a mobile bank for crypto. My contact information, if you guys have any questions, we'll have some time at the end. Otherwise, feel free to contact me, Twitter or LinkedIn. Okay, so everybody's heard about Bitcoin in this room. Who's heard of Ethereum? Okay, great. Tether. Okay, good. DAI. Okay. Compound. All right. Uniswap. What was that last one? Uniswap. Okay, a couple there. Great. What about Coinbase? Okay. Binance? All right. What about decentralized exchanges? Who's used a decentralized exchange? Okay, great. I'm seeing some of the same people. Let's move forward. We're going to talk about a number of things that I just asked about as we go through the presentation, starting with Ethereum. So Ethereum is a smart contract protocol. It was built by Vitalik Buterin initially as an upgrade that he proposed to Bitcoin. He wanted Bitcoin to have this generalized programmability. And at the time, the Bitcoin developers rejected the idea and said, no, we want to focus on this one particular use case of digital gold, basically, a sovereign store of value. And that's all well and good, but if you just decentralize value, but you don't decentralize the system that moves the value around, vis-a-vis the financial system, then all you've done is create a better gold. You haven't created a better financial system. So that's one thing that Ethereum is moving towards, and that's the topic that we're talking about today. But that wasn't necessarily the first and only goal of Ethereum. It was definitely something that Vitalik talked about in the white paper for Ethereum, but it wasn't the only thesis behind Ethereum at the time. And over time, the narratives of Ethereum have evolved and certainly are different than they were when it began. Originally, it was sort of this idea of Bitcoin 2.0. Later, dApps, there was this phrase, unfortunately, the world computer, that still sticks around. And then later, utility tokens, ICOs, the speculative mania that resulted. And since then, there have been a number of narratives that have developed. One of them is open finance, also known as decentralized finance. Now, this chart here, this visual is inspired by a similar visual that was created for Bitcoin. And Bitcoin has changed its narrative over time. The community has shifted from it's a world money to a world digital gold to a sovereign store of value. And it has sort of landed on that last idea there, the sovereign store of value, a digital gold that can compete with governments. Bitcoin is great, and I don't think there's many people that will argue otherwise, but it's not enough. If we want to really empower people with value that they control, that is self-sovereign, then we have to do more than just give them digital gold. We have to give them digital finance. So decentralized finance is really a movement. It's a social movement. It's a technological movement. It goes by a few different names. DeFi is decentralized finance. OpFi, open finance. Unfortunately, DopeFi is another term that's been used for decentralized open finance. I'm going to refer to it as DeFi. It's the one that seems to have stuck for now. The idea behind all of these, the same core principles, are this idea of financial inclusion, of interoperability and open source finance, of accessibility, of financial transparency, a financial system that everyone can access anywhere in the world, that is open to all people, regardless of whether the financial system or the government in their jurisdiction permits them to access finance. They will still be able to access decentralized finance. So this is a problem we take for granted here in the Western world. We have the Robinhood brokerage app in our pocket. We have the US dollar. We have all flavors of brokerage accounts, Venmo, PayPal. That is really a privilege that we have that much of the world does not have. You talk to people in Argentina, in Venezuela, in other countries in the world with less stable economies, and their money is rapidly depreciating in value. They don't have access to invest in the US stock market. Their local financial markets, say, their local stock market may have very few options for them or may be closed to them. Or they just may have access to a financial system that's entirely controlled by their government. So meanwhile, DeFi is growing. We have $500 million of value that's locked up as collateral in the decentralized finance system. It was at a high of 650 in the middle of the summer, and it's come down a bit as prices have retreated somewhat. So a lot of the value that's locked up is in Ethereum. Some of it is wrapped Bitcoin, which is a sort of a tokenized form of Bitcoin, not technically as decentralized as we would like because the Bitcoin is held as collateral, and then the token representing it moves across the Ethereum blockchain. But DAI is another way that value has been stored as a derivative of Ethereum. DAI is a stablecoin pegged to the US dollar that's backed by Ethereum. And we're going to talk a bit about DAI in a second, but first let's just look at the top DeFi applications. So Maker is a smart contract system that allows for someone to lock up Ethereum and then issue DAI as basically value they can borrow against their own Ethereum. So rather than going to a bank and saying, hey, trust me, or here are some assets that you can hold for me if you don't trust me, give me some money to borrow against these assets or against my credit, instead you can actually submit digital value into a smart contract system, and it could be your own digital value, and you're not giving it to anyone else, and then you're borrowing against that value. So this is something that is possible for some people and some assets. If you're very wealthy, you can borrow against your stock portfolio. If you own fine art, you can get a loan against your fine art. Other rare or luxury goods, you can borrow against those. The form of debt that most people have access to, though, is, say, a mortgage or auto loans or some other loan that's backed by your asset. Well, when value now becomes digitized, you can get loans against that as well, but because that value is on a blockchain, you don't have any intermediary that you have to trust. And that's a very powerful ideal because there's no one that can tell you what you can or can't do with your money. So Compound is another protocol. Compound allows you to get interest on your value. So say you have Ethereum or you have DAI or USD coin. These are different assets on the Ethereum network. You can submit that to the Compound Smart Protocol system and someone else can borrow those assets. And then as they're borrowing those assets, they're accruing interest that they owe to you. And when they later go back and they want to retrieve the collateral they've locked up, they pay down their loan, you receive that interest. You're actually receiving that interest basically streaming to you, which allows for some interesting applications. There are a number of other protocols here that we'll talk about as we go through the presentation. So this is a map of Ethereum decentralized finance as of October of last year. So you see there are a number of categories here. 10 different categories. There are a bunch of different teams working on a bunch of different ideas. Fast forward to March of this year, and you have 12 categories, and you have 2 to 3 times the number of teams. So it's really a vibrant ecosystem right now that is tackling this problem of open and decentralized finance. So something that's really interesting when you remove middlemen from finance is you can, and when you recreate finance as software, is you can make finance composable. So, this is a simple diagram, but it's showing us just this puzzle quality to decentralized finance. We can take different pieces, say an exchange component, Kyber, 0x, Uniswap. We can take a stable coin, say DAI or USDC. We can take a lending or borrowing protocol such as Maker Compound, or a derivative protocol like DYDX or UMA. And we can combine these different protocols in different ways to create novel new financial instruments, ones that mirror the real world or go further, which is fascinating. So here is something Justin talked about earlier, CryptoKitties, as one corner of the puzzle. It is unfortunately what Bitcoiners sort of think of when they think of Ethereum as CryptoKitties. And it's a 2-year-old game that was at the height of the speculative mania. And, that was not an Ethereum-only speculative mania. That was a crypto in general, including Bitcoin, speculative mania. But I've kept that here just to represent games because, games are an interesting idea. They are a part of finance if you allow for people to own digital items and earn a living as they're playing games. And, that's a wildly different idea relative to the current way that game companies just represent digital items as a figure in a database that they own, the user doesn't own. So, you can imagine a gamer in the future being able to earn digital assets that have a real value, get loans against those digital assets, lend to those digital assets, and, that sort of seems silly, but it's a radical, different future. And I focus on just that, area of games as a niche, but think of all of finance and think of the entire globe and think of everything that you can do when you have, no banks controlling finance. It's really interesting to think about. So this is the decentralized exchange map. There are a number of decentralized exchanges. So we talked earlier about Coinbase and Binance. Those are centralized exchanges. And when you're trading on one of those exchanges, you are actually giving custody of your assets to the exchange, and then they're representing that as value in their database, and it moves around as you trade. What a decentralized exchange allows for you to do is trade that asset without anyone taking custody of that asset. So whether it's Uniswap over here in purple, or say Ether Delta is a much older DEX, or IDEX, is the most popular DEX. These are sort of a core component of decentralized finance that developed earlier on that set the stage for what came next. Now, I want to point out these dots here in the middle. The yellow ones represent users on some public address on the Ethereum network that is communicating, making trades on 2 different DEXs. And then orange would be 3 different DEXs. You see some clusters. And then red, 4 different DEXs. So these are traders, but these could be, dApps as well. They could be organizations, teams who are holding some digital assets. Admittedly, it's a small ecosystem right now. 500 million is not a lot of money, but it's growing very quickly. And, it's something that, as we'll see, is really starting to hit its stride right now. So, stablecoins. So we talked about DAI a little bit. This is showing the different stablecoins on Ethereum. And I want to highlight that DeFi is where Ethereum is shining. Ethereum is where DeFi is shining the brightest right now. It's certainly not only DeFi. Ethereum's not only DeFi. And Bitcoin you can also include in DeFi. But all the experimentation happening right now is on Ethereum. So The other stablecoins that I want to talk about are Tether and Orange, and then also on USD coin. So both of those have, they're collateralized stablecoins, but not collateralized by decentralized value, but instead collateralized by centralized value. So the Tether team and the consortium behind USD coin, they're actually holding US dollars in a bank account somewhere, which means you're trusting them, and that's not really what decentralized finance is about. But it's still interesting to see here that as Gen 1 stablecoins, the total transactional volume of stablecoins now is greater than the transactional volume of Venmo. And it's obviously growing much faster than Venmo as well. So, again, like the composability of DeFi is, I think, one of the most interesting aspects about it. So DAI is the original flavor of DAI. It's a decentralized stablecoin that's pegged to the US dollar. And then, what a team did is figured out how to lock DAI into a smart contract system that then will allow for a representation of DAI to trade on a side chain to Ethereum. And that they call XDAI. XDAI can move without fees and very quickly. It's like the Lightning Network for Bitcoin, a bit different in a way, but could be used as, say, like an instantaneous low-fee money system, which Ethereum could not be used for. So another flavor of DAI is CDAI. CDAI is the token that you receive when you lend DAI to Compound. CDAI is a token that you can go and trade itself, but as a holder of CDAI, you have a claim on DAI, but you have a claim on DAI plus interest. So, that's sort of like, a government bond or something. Like, you have an asset, you can go and redeem it later for the value plus interest. Then there is iDAI, which is similar, but for a different protocol called Fulcrum, which is a derivative protocol. There's RDAI, which allows you to take CDAI, lock it up, and then the DAI you can retrieve later, the interest you can pledge to a nonprofit or a dev team or some other cause, maybe a friend, or, I don't know, yourself. And you could say, I'm going to live off the interest, or I'm going to do something fun with the interest that accumulates from my DAI savings. iDAI, I spoke about. LSDAI is similar. It earns fixed interest instead of variable interest. But all of these are built on the original DAI. And I wanted to show this and talk a bit about it to show just how explosive experimentation is right now in decentralized finance. So, taking a step back, this is the network of DeFi protocols last November. So, you can see Augur here, you can see Compound, you can see Maker. Again, the yellow dots here are users that use two different protocols. Orange, a few. Brave explorers back in November were using 3 different protocols. Now let's fast forward. So August, you can see, again, Compound, Augur, Maker. Now you see Uniswap, Nuo, Synthetics, DYDX. Nuo actually is here. This is Instadapp there. And there are many more users that are now using these protocols. A lot more that are using many of them as well. Compound is very popular. Maker is very popular. But there's some power users that are using many of these. And some of these users actually could be other protocols that just are not represented because they're not large enough, but they could be some of the composable systems that we were talking about. So this is cool stuff, but how is it going to get in the hands of regular people? How's it going to move past the crypto nerds, the crypto enthusiasts who maybe made some money in the past based on buying and holding crypto and now are looking for a way to get some interest on it or do something interesting with it? How do we move to actually changing the world? Well, what is going to be required are user interfaces, and this is a very interesting area right now in decentralized finance. So I'm going to talk about three. Formatting is messed up here a bit, but smart contract wallets are tying all of DeFi together. They're making it accessible to anyone by providing very simple UI on top of these powerful financial protocols. So let's talk first about InstaDApp. So InstaDApp is a web UI. I'll show you what it looks like in a moment. It allows you to lend your cryptos and earn interest. It allows you to borrow against them. You can, just take out a loan. You can, say, borrow so you can short another asset or get leverage on an asset. You can swap those assets as well. So here's a screenshot of what InstaDApp looks like. So anyone, anywhere in the world could connect to this user interface. It's just a website. You can connect with a number of different wallets. It could be a mobile wallet, it could be a hardware wallet, it could be a web browser wallet. And that wallet is, who here has used a crypto wallet? Okay, so many of you. For those of you who haven't, a wallet just holds your keys. It manages your public keys, which are representative of your identity, and it then also holds in secret your private keys, which allow you to verify you are the holder of that public identity. And besides just identity, your actual coins only move when you use your private key as well. So there are a number of ways you can hold those keys. You can do it on a piece of paper if you want, but you have to use some digital format to connect with InstaDApp. So you would connect your wallet, and then you would have access to Compound, access to Maker, access to Uniswap. And what this UI allows you to do is really interact across these protocols. So you could have, let's say you lend out your assets on Compound, and then you realize you can get a better rate on a different stablecoin by lending out on Compound. Well, rather than pulling your assets out of Compound, going exchanging on Coinbase, and then coming back and lending them again, you can, through a single click, rebalance, and Uniswap will construct a single transaction that will move your money out of Compound through Uniswap and exchange it for another stablecoin, and then move it back into Compound. You could also, say, have borrowed against your Ethereum. You could borrow DAI on Maker, and you could be paying, say, Maker, their governance system, raised interest to 15%, and you see that on Compound, you could be borrowing DAI for 10%. Well, you could come to InstaDApp and you could, with a single transaction, refinance your loan. This is really, really powerful stuff. If you think about how long it would take you to get a loan on just any loan from a bank, much less on a digital asset, the paperwork that would be involved, the relationship you would need to have with that financial entity. This is like 3 seconds to get a loan against your digital value. It's remarkable. So another example I'll talk about is Zerion. So Zerion allows you to lend your assets similarly to InstaDApp, borrow with Maker as well, and trade with Uniswap. So it's similar in that it has the same composable protocols, but then it has a user interface that is more complex. So they're catering to a more financially savvy user, more of maybe a trader or someone who runs a fund. And I'm showing Zerion just to show ultimately the spectrum of the user interfaces that are being built. They do the same thing, maybe present different options and are simple or complex for a different user, but the ultimate protocols that they're being built on are similar, and the power is similar, and whether they serve someone who's new to finance and decentralized finance or someone who is more of a power user, they all get the same financial access. So, let's take it a step further. Argent is a mobile smart contract wallet that is really leaning into being as simple to use as possible. So rather than using as your public identifier some random string of numbers and letters, they use just a simple address. It's, your name. It's like, a Twitter handle or, any other, social media handle, Venmo handle. And you can send money to someone just based on that handle. The transactions are free. You don't have to pay fees. And you don't need to back your keys up, using any like paper wallet or hardware wallet. Instead, you can use a group of friends who all will help you recover or lock your wallet if something happens to it. And this is completely decentralized. There, is no one that could stop you from sending money from this wallet to a friend's or swapping for another asset, or within the wallet you can lend your assets and get interest on them. You can borrow against them and get a loan, and in a way that is completely unstoppable and that anyone in the world can have access to. So the same protocols earlier that we've talked about, Kyber as well. So I'm going to play a quick video if I can. It might not work. No. That's okay. So Argent has an ad that is a 1-minute long ad, and it's super slick, and it just runs through all the different things you can do with the wallet. And what you get the sense of when you see the advertisement is this stuff could be mainstream. When will it be mainstream? I don't know, but it's groups like this that are working to make that happen. So DeFi is moving up the stack. It's not just about receiving or sending value or getting loans or borrowing, but it's ultimately about building robo-advisors that will seek out a return on investment for your assets automatically. So you don't need to pay a hedge fund, have access to a hedge fund manager. Anyone in the world could get access to a good return on investment. Financial inclusion for everyone, everywhere, that's the goal. And it does seem like the future's bright. It looks like this is happening. Thank you.